Welcome back, peer structure traders, for another market analysis for the London session and again, potentially into the US session. Today is April 21st, 2021 here in Hawaii and will be April 22nd, 2021 in London. Today we'll be going over some of the levels we're looking for on S&P 500 and also gold. And again, these levels could potentially move into the US session. With that, guys, if you guys do enjoy these videos, please go ahead and smash that like button. If you guys are not subscribed to the channel yet, please go ahead and subscribe. For those who watch these videos, like the videos, again, and are subscribed to the channel, thank you guys so much. Really appreciate that. For those who have any questions, feel free to pop them in here on YouTube. We would love to get back to you guys' questions. With that, guys, let's go ahead and hop into it. For S&P 500, you can see that we did have some support down below at 41.1250, which during the London session prior we couldn't get through, and then we kind of held right around these 20s. You see price kind of held right around this minor level of a 20 that we couldn't break down below, and then shot right back to the upside. So for the London session, we are reaching some resistance right at about 41.62 to about 41.6475. We have a nice top out right there, and we want to see if we reject this area again. If we do, we could see S&P try to pull back down a little bit. This is where we want to see it come. Either it's going to come to a very minor level, which is a level right here at about 52, or we're going to break below that and try to pull it down a little bit deeper back into this prior resistance to use it as support. Right around these 41 to 46 is my level of support that I'm looking for the market to try to come back and retest and push the upside from there. But for those who don't want to be short, you're going to look for the support to come down into this area, maybe at 41, may potentially even hold above that right here at those 46s and get that bounce to continue the move back to the upside. So we'll see if that actually happens. If not, we could break down a little bit deeper and see this pull back into right around 33 to maybe as low as about 28, as that is our levels of resistance too. For those who want to be short, you can look here at about 64 to 62. Above that, we're going to have 41.7875 as our next level of resistance. That's going to be more of my major level up at the top. Now, there is another level in between that could act as some pretty strong resistance, which lies right here. So we want to pay attention. This may be a level we find resistance sooner, 73.50. So before 78.75, 73.50 is going to be a level that I'm actually looking to see if we target on the upside for resistance as well. Let's take a look at a smaller chart here on S&P 500 as well. Give you guys a closer view. You can see we tapped that level of 64, came back underneath it. Now we're tapping those 62s. Want to see if we get that resistance. From this area of resistance, we're going to look for this market to try to pull down, find this level of support right here, maybe at about 41.55. Then we may get a nice minor level support there and try to push back up. If not, we're looking for the deeper pull down into these 46s, and if below that, right around these 41. So we'll pay attention to those levels of resistance that could react as support if we do move back down. But for those that want to be short, right between these 62 to 64s is your first opportunity for shorts. If you want to go long, it's gonna, again, my first area of interest, minor level 55, more major levels 46 to about 41. With that, guys, let's take a look here at gold real quickly. Gold, kind of similar. We did have a nice movement to the upside. You can see what we're doing right now is testing those 1798s as resistance. I do believe we're going to try to pull back down into these 88 to 90s as support. We did support that level off this double bottom right here and pop right back up. So we're going to have a minor level which is right in between, but be careful with this. If you're not good at trading in between levels, especially if it goes into a sideways range, watch out for that. In the ranges, you want to trade and sell high to come back down to the middle of the range and then the bottom, and then buy low to go back into the middle and then the top. So we want to keep that in mind when we are trading. There is times where the market trends, but there's also times where the market actually goes sideways. The majority of time, though, within markets, you're going to see more sideways movement than you do see it actually trending. Always keep this in mind. If you guys have questions about this, feel free to pop them in here on YouTube. But again, according to you, it's according to your type of approach, but you want to understand it's the context of the market that you want to always keep in mind. If you got trades that you want to, trade strategies you want to use, such as like buying dips are best used in trending markets. However, if you try to buy a dip when the market is moving sideways, you may end up buying the dip right in the middle of the range, which becomes very dangerous, which becomes very choppy and very, very frustrating and emotional, right? So you want to make sure that the approaches that you use are in the correct context of the market, right? And you want to understand, if you're going to approach a market to buy a dip, does the market have enough space to actually continue that dip movement in the direction of the trend, or are you kind of right in the middle or too close to resistance, too close to support? You want to pay attention to these types of things, sell rips. These approaches matter within the context of the market. So want to keep that in mind. But for this sideways movement right now that we see on gold, again, we're going to sell around 98.3 if we can't get through that level. Maybe get a nice B top, maybe a double top, that would be perfect. Then bring the price right back down to the middle. Same thing with the bottoms. We're going to get that bottom out. Price may move down, but if it can't break this area, look for maybe that two try failure. Failed to do that, might even turn into a double bottom there. Look for the upside from there. All right, that's what we're going to look at for gold. Underneath those levels of support at 88 and 90, other levels of support going to come in right around 83.8. Next level for me is going to be around these 80.3s and then 78.2. Below that, 74, 66, 61, and then 58. Let's go ahead and take a look at a smaller chart here on gold as well, so you guys can see. Kind of erase these drawings here for a second for you guys. You can see what we got here, kind of right in the middle. We're a little bit closer. We got a closer view now up on this gold chart. We're right in the middle, kind of right in the middle. Now, we do have a minor level we want to keep in mind, which is going to be somewhere right here, right between these 93s. Now, this is an opportunity that we had earlier, and we've had a couple, right? You can see a double bottom. We can see another double bottom. You can see price touching that level again. Here, we may even pop. If we hold this level as support again, we might pop right back up, target this level right here at about 96, and then the upside of 98. Now again, if you guys struggle with this type of stuff, it's best to get in front of the screens with people who know what they're doing, right? If you struggle with major or minor levels, understanding market structure, price action movement, get in front of people who know what they're doing, who do it on a daily basis, who can actually help you understand how to find consistency in these markets, how to trade them better, how to have the right psychology, the right mindset, right? Every day you're gonna try to approach the market with a process-based approach, not so much worrying about the outcome of the actual trade, but if you can perform with the same process every single day, day in and day out, and not let those emotions kind of overcome you, right? And not allow yourself to overtrade, right? Get that fear of missing out on trades, get that fear of even entering trades. But do the same thing. Set your analysis, set your levels, allow price to get to the levels, allow price to move around a bit, right? Try not to just get right in, but set an actual process that you have of what you need to see in order to get you into the trade, right? And try to follow that every day. There's going to be days where you win a lot of trades back to back to back. There's going to be days where you lose a lot of trades, right? But you want to set a specific rule of how much trades you're going to lose, right? Maybe lose 3 trades in a day, call it a day, come back the next day, right? Don't overdo it, right? The majority of people who fail in this business, or who quit, are people who cannot control themselves within the trading day, right? You could take 2 weeks to build up an account, and in the matter of minutes, hours, or within one day, just blow everything that you worked so hard for out. Just blow that whole account out, right? And when you look back, you'll see it just order upon order upon order that's stacked up, and it just looks like a clump of buy and sell orders all together within one small period of time frame within that session, right? And you want to pay attention to that, right? Because if you can control yourself, control the amount of trades you put on, right? If you could do that, the majority of the time you'll have another opportunity to come back into the markets. And again, there's one big thing that I always tell my members and people that I coach and people that I work with. I always tell them, one key thing about trading is you want to be able to stay in the game. Very, very important. You want to be able to stay in this game. This game we play, again, you're always going to put risk on. It's just money, honestly, and if you can get that in your mind that it's just money, it will be a little bit easier. But if you also can get in your mind that discipline and patience and not overdoing it within the day also gives you an opportunity to come back the next day. That's very, very important things to keep in mind, right? But back to the charts here, guys. 93 is the first minor level, 93, 92 first minor level, more major levels of support 90.2 to about 88.2. If you guys were in the peer structured trading Zoom room with us earlier today, within the beginning of the US session, and maybe about an hour within that, and maybe even 2 hours after that, you would have been able to see some of the levels we were looking to trade on S&P and also gold. But we're going to be putting up a little bit later on down the line. We're going to be putting up some mid-market recaps for trades that we've taken, right? Help analyze why we were looking around those areas and why we're looking to trade those. But we'll put up some videos, see if you guys like those. If you guys do, just let us know, comment on them if they're helpful, especially with these videos, if they're very helpful for you guys. Again, leave us some comments. Let us know some of the things that you want to better understand, or some of the things you want to see here on these YouTube videos, some of the things you're struggling with. And, we'll make videos to kind of touch up on those areas. I know a lot of people struggle with psychology and trading, and I know they hear the same things over and over again: discipline, patience, don't overdo it, don't overtrade. A lot of those things are constantly repeated because the majority of traders who get into this field are constantly making the same mistakes over and over again, falling back into the same bad habits, right? So it's a constant repetitive thing that you hear and hear and hear. And a lot of times, it doesn't just happen overnight that you change yourself, right? You have to go through a lot of downfalls, a lot of emotional spirals, and there has to be a point in which you say enough is enough, right? And you just decide to actually change that. Same thing that happened with me, same thing that happens with a lot of traders that do this for a living. All right, so we're going to always keep this in mind. But again, if you guys have any questions, feel free to pop them in here on YouTube. We will get back to you guys. Again, if you guys like these videos, smash that like button. If you're not subscribed to the channel yet, please go ahead and subscribe. For those who view, watch, and like these videos, thank you guys very much. Again, if you guys have any questions, if you guys have any comments, if you guys want to see anything more, if you guys struggle with anything and you guys want us to pop up some videos on here regarding psychology, regarding actual trades, what we look for, feel free to put that into comment section. Again, we're here to try to help you. We are here to try to help you guys succeed in trading and find that consistency. With that said, guys, you guys take care. Have a great night. For those that are a part of pure structured trading, I will see you guys in the London session later on tonight, and we will get back to trading gold and S&P again. We'll be popping up NASDAQ and also oil a little bit later down the line for those who do trade that. So keep posted with our videos. If you guys want to join pure structure trading, feel free to pop into the website. We'll get back to your guys' emails. You guys take care. Have a great night. Trade well.